Hello everyone. If you want to go to my free course, type henry-ward.co.uk into Google, then go to Henry Ward Trading, and then this here is my free course. Click on Start Today. If you want to go on to the webinars that I do every Sunday and every Wednesday, click on Trading Academy and then click on Start Today. So this is the Trading Academy. This is the full training, the webinars, direct access to me, everything that you want. Hello everyone, and welcome to another episode of the Market Watch. So today we're going to go through how the market has been affected by SVB and what we have seen in the market and what we expect to happen sort of next. So the first one I'm supposed to look at is the dollar index. So as we can see, the dollar was in an upward trend here. It's heading up and it got to a high of 105. And then since then, we've had a little pullback, a nice retest here, and then an extra continuous dog leg to the downside. So with what's going on with the likes of SVB, we have bailouts, we have market uncertainty, we have dollar getting weaker, we have loads and loads of other stuff like that. So that is something that we anticipated with what's going on with the market. We have dollar getting weaker, and we would expect dollar to continue getting weaker over the next couple of days and weeks. Yes, we have a bailout between UBS and Credit Suisse, so we do have a little bit of upside on this. Now, for anyone who has been watching this, there's a sort of a merger between the both of them, and UBS and Credit Suisse, 17 billion of Credit Suisse COSs have been wiped clean. So that means then the debt has been almost instantly disappeared. Now, whether that is should be done or is a different matter, that's an ethical thing, but it's now disappeared. So how does this affect the market? How does this affect us? Is this going to sort the issues with the banks? No, it's not. Is this going to sort the issues with US dollar? Again, no, it's not. So we'd expect the US dollar to continue with its weakness. Now, if dollar continues to get weaker, what other instruments also moves? Yes, you got it right, gold. Gold also moves. So if we have a look at gold, we've seen this magnificent spike on gold over this period of time. So we have gold after taking off from the 8th of this month up to the high up. So it went from 1800 to 2010, which is a phenomenal little run on the likes of this. Now, is there more upside in this? And the short answer is yes. But the long answer is we would expect some sort of pullback before this happens. So the idea is we have a record high. Well, it is a record high here at 2076. So once that hits that, we would expect to have some sort of rejection. But also what I'd expect here, as we've seen two bars selling off, would expect a little bit of a pullback in this. I'd expect this to come down a little bit further. And the area where I would probably expect this to come back to is down around here. Now, the only question with this is US dollar strong enough to pull gold down? Is there too much of a demand for gold at the minute? Are we going to see the spike off this level here? So this is a break, or there's the break, and there's the retest. So there's the test, break, and then retest. So if we drop down to the smaller time frame, down to the 4 hour, we actually have a setup here on the 4 hour. Now, is that bar the perfect bar? No, it's not. Absolutely not. But we do have a little trade there. We have a buy signal at that particular point, long, entry there, stop loss below it. And the question we sort of have to ask ourselves now, is that a high probability trade, or is that not a high probability trade? So they're the two things we have to sort of work at. And in the grand scheme of things, this is not a high probability trade. Now, but there is a trade there trading on momentum, And if we can see this, there is unbelievable momentum here. We've had a little pullback, and this is a 4-hour pullback. This is not a daily pullback, it's a 4-hour. And on that 4-hour trade, then the momentum continues going. Now, would I be looking for a 3-to-1 on this particular trade? No, I'd be trading my stop loss. I'd be taking some of the underlying things that are behind it, making sure there's news coming out, making sure that the opening bell on the likes of these, that means that it hasn't had massive dollar strength, which means then we'd have more gold weakness. Also, I wouldn't be getting in on this as a live trade. I'd be getting in on this as something that is a pending order. And the reason for that is because then I'm not in the market. If the market continues dropping, I'm not getting triggered out. And that's the whole idea of this type of trade, is that we're not jumping in live in. We have to wait for the market to confirm. And then if the market takes off to the upside, we're ready there with the trigger. Now, like any trade, you trade at your own risk. This is not advice, it's just education. So just make sure you do your own due diligence before you take any particular trade. Now, another thing that we're looking at is sort of linked to this as well, is the likes of the indices. So we were looking at the indices, and I had a pretty decent area or level here. So it came back into this area. We didn't have divergence because that's a lower high anyway. And what I've done is I've put a little short entry there. Now I've put my stop loss above this high. So my stop has to be above that high, because this may come up, we may get a little bit of a wick up here and then come down. At this particular point, with the broker I'm using, I know this bar is down here, but I haven't been triggered in on that particular trade as of yet. So that is still pending, it is still sitting there, and it will stay there till it breaks my stop loss. So that means then I have a trade to none. So it doesn't matter whether this trade goes up, I still haven't lost any money. The market may have disagreed, but it cost me nothing. And that's the beauty of placing pending orders over the likes of getting in live in the market. Now, if we look at the other US, we have this here is running to the upside. It's looking like it's quite hot. We have the S&P, which hasn't moved. It hasn't really moved anywhere. It's moved sideways, whereas the Nasdaq is almost up around this area. If we look at the Dow Jones, we also have that there. So we have a run here to the upside on this, but we haven't the Nasdaq is up here at this particular point. So that means then we have something to look at. Is the Nasdaq just overexposed because of the stocks, the actual stuff that's in it? Or is the S&P and the Dow undervalued? Are the banks holding it down? Are the old money not as confident as new money? So the likes of the tech sector seems to be running quite hot, quite good. And then if the other two markets are undervalued and then the Nasdaq is overvalued, is that something that we can look at? There's a what would I call it? There's a divergence between the two of them. Now, there's two outcomes to this, is that the other two markets catch up on the likes of the Nasdaq, or the Nasdaq catches up on the other two markets. And in this particular scenario, the trade that I've placed, I'm anticipating that we have a little bit of a drop on the Nasdaq to bring it down to the other two markets. So that's what I'm looking at with this particular trade. Now, the idea with the likes of this is that I could be wrong. There's a chance that the other markets will catch up on the likes of Nasdaq and it slowly runs up, which again, because it's a pending order, I'm quite happy with the likes of that. Now, if we go into, say, the European markets, we've had a little bit of bullishness on the other two markets. So, and can you work out why we've had a little bit of bullishness on the likes of the German, the CAC and the UK? Well, if you haven't guessed it, it's because of Credit Suisse being bailed out. Okay, so they've now wiped away their debt, which is phenomenal, and that's why we've seen a little bit of a bull run on the likes of these markets. Now, can we get in on this at the minute? Maybe on the smaller time frames, if you expect it to continue running. But for me, if you were looking to trade this to the upside, we have to have a break and retest of this level. Now I don't care whether it's on the 1 hour, the 4 hour, any of them, and then you have a setup, but I don't want to see people jumping in here at the minute because you're in the middle of that phase one. We need it to come back before we actually take that trade. All right, so in this particular scenario, we need a break, retest, and then have a nice entry bar. We don't want to see a big, huge bar like this because we have to have a one-to-one before it hits this high here. We cannot be looking for a one-to-one outside that because this here will be a resistance level. Yes, there's a feel-good factor for a couple of days, but it may stop. It may come to an end very, very quickly, and it seems to be that there is an area where it sort of may stop. Can't guarantee that it will drop, but you'd expect it to stop at that particular point. So anyone who has been onto my free course, anyone who hasn't gone onto my webinars, anyone who wants to come down to the trading floor in Mayfair, because this is where this was held, you probably can hear some noise in the background. It's because we're on the trading floor here in Mayfair. If any of you guys want to come and sit with us or speak to us, just reach out to me there on any of the channels there on the YouTube channel. Just reach out to me and you're more than welcome to come down and see us. Thank you very much. Have a nice day. Bye bye.